This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Goldilocks price? Crude oil tops $60 a barrel. Is it the perfect level to keep producers, frackers, and consumers happy?
Possible courtship? Microsoft reportedly thinking about buying Salesforce.com, but why would it want to?
Redefining your golden years, why a traditional retirement may be a thing of the past. All that and more tonight on Nightly Business Report for Tuesday, May 5th.
Good evening, everyone, and welcome. A triple-digit loss for the Dow Jones Industrial Average as bond yields rise and oil prices break $60 a barrel, a key psychological level. West Texas Intermediate hit its highest levels of the year on continued unrest in the Middle East and news that Saudi Arabia had raised its official selling price. Oil closed higher by 2.5% at $60.40 per barrel, its highest settlement since December, and up more than 20% over the past month. Jackie DeAngelis has more on the upward swing in prices and where they may be headed next.
Crude prices appear to be defying gravity, even amidst global oversupply. Today's spike fueled by geopolitics. Concerns again in the Middle East as a crucial Libyan port was closed by protesters and as Saudi strikes in Yemen continue.
Technically, the crude oil market was showing a lot of strength, but we needed to get above $60. When you look at the geopolitical factors, the supply situation improving, the problems that we have with Libya, production flatlining in the U.S. That was the factor that we needed to take it technically above $60.
Crude has been flirting with the $60 level for several days, but every time it almost got there, it was shut down. What's different this time, and will that strength continue?
I think now that we're over $60, we stay there at least for the summer because we usually get a lot of demand for products in the summer, gasoline and diesel, and that's made out of crude oil. I could see a very strong summer for crude oil. I could see us trading $65 to $67 by Memorial Day.
The timing of crude's recent move coincides with the start of summer driving season. Now, typically there is a lag between a spike in crude and the price at the pump, but this 20% jump that we've seen in the last month alone has taken gas prices up to $2.63, according to AAA. That's up almost a quarter from just a month ago. While gas prices tend to rise seasonally at this time of year, traders agree it's a quick jump, considering Memorial Day is still more than 2 weeks away. On a relative basis, gas prices averaged $3.67 at this time last year. So consumers are still saving, but the gap is closing in, just in time before vacationers hit the road. For Nightly Business Report, I'm Jackie DeAngelis.
And with the recent recovery in oil prices, many want to know exactly what Saudi Arabia, the world's largest crude exporter, thinks of the market right now. And Hadley Gamble spoke to that country's oil minister today at a conference in Riyadh.
Oil prices punching above $60 a barrel today for the first time since last year. But according to Saudi Arabia's oil minister, no one can set prices except Allah. In an exclusive interview, 20-year veteran Minister Ali Al-Naimi told us he isn't worried about what a nuclear deal with Tehran could mean for the market and stopped short of predicting where prices are going to go next.
I'm not worried about Iran crude, nor will I try to predict what the price is. If I were to predict, I would be somewhere else gambling.
With several oil crises already under his belt, Mr. Al-Naimi led the move by OPEC last November to cut production, a calculated gamble by the kingdom to maintain market share, one which some analysts say has yet to pay off. But a recent government reshuffle inside the kingdom brings in new and younger blood, and rumors have surfaced about the fate of Saudi Arabia's oil oracle. The 33-year-old Deputy Crown Prince Mohammed bin Salman this week announced a restructuring of state oil giant Aramco, the world's largest oil company. Many say it's the first step in a long road to privatization for that company, and it's a move that separates Aramco from the Ministry of Oil. So who might fill Mr. Al-Naimi's shoes? Well, there are rumors that one of the king's other sons might take over at the head of the oil ministry, and of course that would be a break with precedent. But in the meantime, Mr. Al-Naimi seems to be taking everything in stride. When we caught up with him today, he was in a very good mood. He's usually quite standoffish with the press, but he was happy to see us here in Riyadh on his way to a big meeting of Gulf Arab leaders. On the table, certainly the talks in Yemen. They're certainly going to be talking about Iran, Iraq, and what's happening in Syria. For Nightly Business Report, I'm Hadley Gamble in Riyadh.
Here now with some more insight on the oil markets and whether or not $60 oil is the right price that makes everybody from oil producers to consumers happy is John Kilduff. He is founding partner with Again Capital. Good to see you again, John. Welcome back.
Good evening, Sue.
So is $60 the magic number?
Well, that's an interesting thought that actually came to me from y'all. It could be. It's enough, certainly, I think, to sustain U.S. producers and frackers who are hanging on by a thread, and they'll continue to hang on by a thread at $60 a barrel. And it's also, interestingly enough, I think, expensive enough at the pump that'll make people appreciate it and not necessarily be wasteful of what is really a precious resource. Right. So it's a good one in two ways that way.
I have been feeling, as I'm 60 years old, that 60 is the new 40. So maybe this is true of the 60 is the new 30. So maybe, but here's the question. You know, oil prices tend in the spring to go up as the driving season in the U.S. accelerates, and gas prices do that. Is this sort of is this as temporary a blip up as $42, $43 was a temporary blip down?
I think it may well be, Tyler. The past several years in particular, we've seen the gasoline prices rally right now, and they actually hit their peak just before Memorial Day.
Right before Memorial Day.
And then actually come down all summer long. Particularly as the vacation schedule ends, which it does for a lot of the rest of the country, as early as mid to late July. So, and the pressure then comes off the inventories, the storage of gasoline, and takes sort of the heat out of the worries. And we go into another sort of shoulder season as the market then sort of feels.
Is that what you expect
around.
this year?
I do. I do very much so. All the elements that got us in place to get us down towards $43 a barrel remain and await to reemerge again here over the course of the next several weeks.
So you do ultimately expect oil to go back down?
I do. I do. As a matter of fact, so if these prices were to continue to rally, as we were hearing in some of the packages, of which is $65 a barrel, there's about 500,000 barrels of fracked oil waiting to hit the market at that price level. So we have that cap. We also have the Iran situation progressing. They are dying to get their oil back onto the market, and they have buyers who want it very desperately. China, South Korea, Japan really are desirous of Iranian oil and want it back in their system.
John, thank you. As always, John Kilduff with Again Capital.
Well, stocks closed sharply lower as investors kept an eye on rising bond yields, some mixed economic data, and renewed worries about Greece's bailout. The Dow lost 142 points. It finished at 17,928. The Nasdaq shed 77. S&P 500 was down by 25, more than 1%. Now, about those rising yields, look at the 10-year notes. Now stands above 2.1%, almost 2.2.
Microsoft reportedly evaluating a possible takeover bid for Salesforce.com. According to Bloomberg, no deal is imminent and there are no talks between the two companies. But still, the report sent shares of Salesforce higher while Dow component Microsoft ended lower. Josh Lipton looks at the potential benefits and costs of such a get-together.
If Microsoft really is evaluating a bid for Salesforce, what would be the tech giant's motivation for such an acquisition? Well, for one, these are two companies that already have a partnership. It's a relationship that has only seemed to deepen since Satya Nadella became Microsoft's CEO last year. In fact, at Microsoft's developer conference just last week, Salesforce CEO Mark Benioff was in the audience and watching Nadella's keynote address. Second, Nadella is clearly laser-focused on building out his company's cloud business, which is on track to do more than $6 billion in annual sales. On the other hand, there are real questions about whether Nadella would want to do a deal like this right ahead of the launch of Windows 10. Also, there's the sheer size of the deal, up to $64 billion, according to Evercore. So the benefits of such a potential acquisition are clear, but so too are the costs. For Nightly Business Report, I'm Josh Lipton in San Francisco.
One of the market's bright spots early on today was Disney. After shares of the entertainment company briefly hit an all-time high following its latest quarterly report, Disney beat on both earnings and revenue with a big lift from the company's theme parks. After spiking higher following those results, Disney shares did fall back, and they ended the session on this down day fractionally lower. Julia Borston has the details.
The happiest place on earth yielding magical results for Disney, the media giant exceeding expectations on both the top and bottom line.
Parks and Resorts and Consumer Products had great quarters, but actually all of our businesses did. There are some numbers that weren't necessarily comparable. For instance, the studio had a great quarter, but last year, this quarter, we had Frozen, particularly the video, so that's not a great comparison. And then on the media network side, we had some extra costs at ESPN because of the college football playoffs and the NFL wild card. So generally speaking, all of our businesses had a very strong quarter, but from a percentage increase perspective, Parks and Resorts and Consumer Products led the way.
Disney's domestic parks driving the upside surprise with higher than expected attendance and spending, higher ticket prices, as well as more spending on merchandise and food and beverage. While Disney's broadcasting division reported a near doubling of operating income on the sale of Marvel's Daredevil to Netflix, among other things. And CEO Bob Iger says the strength of the company's mega brands bode well for Disney's future, with Marvel's Avengers Age of Ultron opening to huge success this past weekend and Star Wars coming up in December.
We certainly have grand plans for Star Wars merchandise. You're talking about the #1 franchise in the world in terms of merchandise, and there hasn't been a film release since 2005. So we've already seen interest in this film starting to generate increased interest in the merchandise for this film.
The company is planning a big launch of Star Wars consumer products in September and a Star Wars video game in November ahead of the film's highly anticipated release in December. Iger saying they're pleased with the film so far and there's no question the franchise will create value for years to come. While Disney's acquisitions of Lucasfilm and Marvel are paying off in droves, that doesn't mean any more are in the works. Iger says the company doesn't have any holes to fill. For Nightly Business Report, I'm Julia Borston in Los Angeles.
To the economy, where the trade deficit widened to a 6.5-year high in March. The resolution of the labor dispute at those West Coast ports created a surge in imports, and the strong dollar held back exports. Now economists think that labor dispute could have put even more downward pressure on growth in the first quarter. And according to a new survey, many believe the economy probably actually contracted slightly.
One major pillar of the economy may have gotten some unwanted news today. The average rate on a 30-year fixed mortgage broke through the psychologically important 4% level. That, according to the industry newsletter, Mortgage News Daily.
And one of the country's biggest mortgage lenders is now being sued by Los Angeles. The city alleges that Wells Fargo encouraged its retail bank employees to commit fraud to meet sales targets. Kayla Tausche has more.
It's a familiar scenario. You go into a bank branch looking for a checking account and you get sold on refinancing your mortgage, or you want a credit line and you get convinced to open a brokerage account as well. It's called cross-selling, the practice of getting existing customers at a bank to sign up for more products, and it's been one of the only ways that big banks have been able to find revenue growth in a low interest rate environment. It's increasingly common, but LA's city attorney says that Wells Fargo may have taken it a step too far. A lawsuit filed Monday alleges the bank engaged in what it called pernicious and often illegal tactics to try to maximize the accounts customers took out. Now, the practice was first uncovered in a 2013 investigation by the LA Times, which found employees at Wells Fargo branches were trying to meet steep sales quotas by signing up customers for accounts and credit lines without their consent. It sometimes resulted in forged signatures, in unwanted fees, and even dinged credit scores. It was a program that the lawsuit alleges created market dominance for Wells at a significant price to the general public. And the bank acknowledged then that it fired any employees thought to be involved in the scheme. In a statement from the bank in the wake of the lawsuit, the bank said the company's culture is focused on the best interests of its customers and creating a supportive, caring, and ethical environment for our team members. The company reiterated its commitment to customers receiving only the products and services they need. By Wells Fargo's measures, each household that did business with the bank had 6 of its products at the end of March. Now, few peers actually break out this figure, but JP Morgan did in 2013, saying that on average, its households had 7.6 products. According to the lawsuit, Wells Fargo's internal marketing slogan was "Going for Great," highlighting the bank's goal to raise that figure to 8. Now, each of these violations could come with a penalty of $2,500 as well as restitution for customers, but the bank, for its part, said it will vigorously defend itself against the allegations. For Nightly Business Report, I'm Kayla Tausche in New York.
Still ahead, it may still be 6 months away, but could the largest ever outbreak of bird flu impact your Thanksgiving feast? It is the biggest outbreak of bird flu in U.S. history, and today Reuters is reporting that the government approved $330 million in emergency funds to help contain that disease. The virulent strain is wreaking havoc on poultry in the Midwest, and there's already concerns about rising prices and even an impact on, of all things, Thanksgiving. Morgan Brennan has more.
It keeps getting worse. Both Iowa and Minnesota have announced more probable cases of bird flu, bringing the total number of chickens and turkeys likely affected up to 25 million. This is now the biggest outbreak of avian influenza in U.S. history, surpassing a bout in the early 1980s that claimed 17 million birds. The USDA and CDC say this strain poses little risk to human health and that it has not entered the food supply. But as cases and costs mount, what does it mean for consumers? David Maloney, president of American Restaurant Association, says this is an egg and turkey story.
Roughly 2/3 of the cases so far with egg-laying hens, a third with the turkey production industry. The broiler meat or chicken market for the chicken meat supply, that industry has been insulated so far, and we expect that to remain so at least through the summer.
In the U.S., poultry is a $48 billion market, broken down into three main categories: broiler chickens raised for meat, eggs, and turkeys. Broilers are 2/3 of the market. Eggs make up about 20% and turkeys the remaining 10%. Broilers have been largely unaffected since most are raised in the South. But Iowa and Minnesota, the top producers for eggs and turkey respectively, have been hit very hard. Eggs are currently the biggest issue. Including pending cases, roughly 6% of the nation's layer hens have been taken offline. Experts expect that to push up prices.
We just bumped our forecast higher for egg prices for 2015 by about 15 cents a dozen. That should put us somewhere pretty close to 2014's inflated price levels at wholesale.
In terms of turkey, roughly 1.5% of the U.S. supply has been impacted. Seasonally, turkey is stockpiled from December through August, and so far that pace has been normal. If inventory growth begins to slow, however, consumers may have to pay more for Thanksgiving. Experts are also keeping a close eye on exports. Broilers haven't been infected, but they are the main poultry product shipped overseas. With top trade partners like Mexico and China imposing import bans and restrictions, the price of wholesale dark meat chicken has been falling, about 30% lower than a year ago. For a Nightly Business Report, I'm Morgan Brennan.
Jenny O. Turkey says it is temporarily laying off 233 employees at its processing plant in Minnesota because of that bird flu outbreak. The outbreak has cut the number of available turkeys, and as a result, the company is going to switch now to a single shift.
Sprint added more than 1 million new customers in the first 3 months of the year, but it came at a price, and that's where we begin tonight's Market Focus. The wireless carrier saw its revenue fall as it aggressively cut prices to attract new customers. But the CEO says that's all part of Sprint's business plan.
In our industry, in order for you to grow, you got to invest money. It costs you money to attract new customers, but we have a very clear plan in terms of, when does the company generate free cash flow? And we have a very clear plan in terms of how we're executing in all fronts.
Sprint's quarterly loss was in line with estimates. The shares fell 3% to $4.99. New product launches helped Estee Lauder's bottom line in the first quarter, and the makeup company says it even sees faster growth this year, despite some currency headwinds. Shares rose 4% to $86.90. Kellogg reported better than expected quarterly numbers, profits and sales. The world's largest maker of breakfast cereals cited stronger demand in Latin America. But the maker of Corn Flakes and Rice Krispies reported a decline in its U.S. morning foods business. Kellogg's stock dropped almost 1.5% to $63.18.
Discovery Communications, whose properties include Discovery Channel, Animal Planet, and others posted stronger than expected first quarter earnings. The company says international growth, higher distribution, and a slight increase in domestic ad revenue helped drive those results. Nevertheless, shares of Discovery fell, along with the market day, more than 2% to $32.59. But News Corp missed both profit and revenue expectations. The publisher of the Wall Street Journal said results were hurt by a stronger dollar and falling ad sales at its newspapers. Shares were flat following the news after the bell, but they ended the regular session down about 1% at $15.92. The video game publisher Electronic Arts posted better than expected numbers thanks to strong digital sales and the release of a popular new game title. The company also said it's going to buy back up to $1 billion worth of its stock. Shares spiked after the results, but closed down a fraction in regular trading. They finished at $59.16.
The new reality of retirement involves working past the age of 65. That's according to a new survey by Transamerica Center for Retirement Studies. Sharon Epperson is our expert on that front, and she joins us from the New York Stock Exchange. So, Sharon, is working further into retirement really the new norm?
Well, Sue, you know, we've seen study after study that has shown that many workers, regardless of their age, think that they're going to be working past the age of 65, or maybe they won't retire at all. Now, many of these folks are doing it because of income reasons or health care concerns, but some are also doing it because they want to and because they enjoy working, and many say perhaps they'll even work with their current employer.
Well, Sharon, are some of these people who are working, are they cutting back on hours and working part-time as opposed to full-time?
Well, what I found interesting in this study was they really took a look at what workers who are in their 60s want to do, and they're really the ones that are at the forefront of redefining retirement. And half of them talked about the fact that they will be working past 65. They're going to continue to work in some capacity. But what was interesting were the numbers that said that they're going to have some type of transition into retirement, and that could be working in another capacity with their same employer, something that's less demanding, or it could be doing something where they're working at reduced hours just to have more time to enjoy their life.
Mm-hmm. What are some of the other obstacles? You've mentioned a couple of those. Health issues, certainly, job loss, or what about just the fact that a lot of employers are trying to keep their company to younger employees? I mean, there are some obstacles out there.
There are a number of obstacles. The obstacles that really are confronting many individuals, though, really are of their own doing, and that is they don't have a plan. You cannot get to where you want to go in terms of retirement if you don't have a roadmap. And so it's encouraging that about 73% of those who are in their 60s have some type of plan for their retirement, but only 15% have written it down. So what does that mean? You just talk about it over coffee with your spouse a couple times and you have some idea that you want to be able to retire in some particular city, in some particular fashion, but you haven't really written down how much money you're going to need, how you're going to cover your health care needs, how you're going to cover living expenses, how much is going to be contributed from the government. All of these things you really need to write down so you know what you're relying on for Social Security, what you're going to get from other benefits that you might get from an employer, and what you're going to have to come up with on your own.
Sharon, thanks as always.
Sure.
Really appreciate it. Sharon
My
Epperson.
pleasure.
All right, coming up, the markets were rocked by the flash crash 5 years ago tomorrow. So what changes have been made since then, and what still needs to be done?
And here's what to watch tomorrow. Fed Chair Janet Yellen and Christine Lagarde of the International Monetary Fund speak in Washington. ADP releases its private payroll report for April, something that will be closely watched ahead of Friday's government jobs report. And Bank of America hosts its shareholder meeting. And that's what's on the agenda for Wednesday.
And tomorrow marks the 5th anniversary of the flash crash, the day when the Dow plunged almost 1,000 points in just a few minutes' time. Since then, a report by regulators concluded the flash crash was the product of high-frequency trading. And last month, a British futures trader was arrested and charged with contributing to that sudden market drop. But as Bob Pisani tells us, many say much more still needs to be done.
5 years after the flash crash, regulators have implemented a number of reforms to reduce the chance it could happen again. The most important was the creation of individual stock circuit breakers designed to halt trading when a stock moves outside a narrow band above or below where it is currently trading. Rules for market-wide circuit breakers were also changed. Now, trading for all exchanges will be halted if the S&P 500 drops 7% or more during the trading day. SEC Commissioner Dan Gallagher says the markets are safer.
5 years later, we look back on it, there have been a number of measures taken to address that incident itself. But I think the fact is that we still have a lot of work to do to really understand the current equity market structure.
Indeed, many participants would like to see more changes made. SEC Chairwoman Mary Jo White said she wants to see high-frequency traders register with the SEC. She has also floated the idea of an anti-disruptive trading rule that would ban high-speed trading when the markets are extremely volatile. The SEC has appointed an advisory committee to advise them on what, if any, changes should be made from here. But the regulator seems reluctant to make any big changes right now, apparently believing that the current system, despite its flaws, is working reasonably well. Bottom line, despite a lot of angst and some technology glitches along the way, there hasn't been anything quite on the magnitude of the flash crash in the last 5 years. And regulators are trying to figure out how to keep it that way. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
And that's Nightly Business Report tonight. I'm Sue Herrera.
And I'm Tyler Matheson. Thanks for joining us. Have a great evening, everybody. We'll see you here tomorrow.